Hello, good morning to all. In this video, we are presenting some of the direct tax key proposal introduced by the Finance Bill 2022. First, no change in personal and corporate tax rate. So, the Finance Bill 2022, there is no change in the individual rate, HF rate, or firm or corporate tax rate. So this is the first changes. Second thing is that provision relating to virtual digital asset introduced. So the virtual digital asset is introduced. The definition is under section 247A introduced. Second thing is regarding virtual digital asset. It include naturally cryptocurrency and Bitcoin also. The profit on sale of virtual digital asset taxed at 30%. I mean maximum marginal rate. Second thing is that no other expenditure is allowed for deduction other than the cost of acquisition of virtual digital asset. Next thing is loss on sale of the virtual digital asset cannot be set up under the other income or cannot carry forward to the subsequent assessment year. So these four important points, simply the virtual digital asset concept introduced like fixed assets, tangible asset, intangible asset, like virtual digital asset introduced. Further, the finance minister in her speech in parliament, the government, the Reserve Bank of India proposed to issue certain digital currency during the 2022-23. Next key proposal of the finance bill is that section 194S. The 194S is relating to TDS at the rate of 1% for the profit on sale of virtual digital asset. 1% TDS has to be deducted for sale consideration, not for the profit. That 1% TDS is on sale consideration of virtual digital asset, not on the profit on sale of virtual digital currency. So whenever the income provision is introduced, it is normal that corresponding TDS provision also introduced. So by introduction of the virtual digital asset and tax rate at 30%, correspondingly section 194S TDS provision on sale consideration of virtual digital asset introduced. Next thing is section 194IA. So the section 194IA in short deals with sale of immovable property more than the 50 lakhs other than the agricultural land. So earlier 1% on TDS has to be deducted on the sale of immovable property other than the agricultural land on payment made by the purchaser to the seller. So the purchaser has to deduct TDS at the rate of 1% on the immovable property purchase payment made by purchaser to the seller. So the 1% has to be deducted by the purchaser and deposited in the account of the seller. The seller can take this TDS at the time of his income tax payment. This point is already there in the Income Tax Act. What is the key proposal is that in the place of sale consideration, the sale consideration or stamp value whichever is higher introduced. So at the time of deduction of 1%, we have to consider not only payment to seller but also stamp duty of the concerned immovable property also. So by introduction of this provision, 1% has to be deducted, sale consideration amount or stamp duty value whichever is higher. Then next key proposal, the introduction of the startup. The startup can get the deduction under section 80 IAC for the profit of the 10 years, 3 years continuous exemption of their profit under section 80 IAC. So provided one of the condition for eligibility under section 80 IAC is that the startup has to be started before 31st March 2022. So now due to economic and other COVID situation, that 31st March 2022 extended to 31st March 23. I mean sunset clause 31st March 2022 extended to 31st March 2023. So by introduction of this key proposal, even today some startup incorporated, they can claim income tax deduction under section 80 IAC. Then next key proposal, any amount received by the employee from employer for COVID treatment for himself or for his family is exempted under the Income Tax Act. Because in short, earlier the section 56 subsection 2 class 10, any gift from person exceeding 50,000 other than the relative has to be taxed under the income from other sources in the hand of recipient. So, but by the introduction of this provision, any amount received by employee from employer for COVID treatment for himself or for his family is completely exempted under section Income Tax Act. So, corresponding is made under section 17 subsection 2 and 56 1. Next key proposal is any amount received by a person from other person or employee other than the employer, like some social institution or charitable institution for COVID treatment for himself or her family is exempt up to 10 lakh. So this is another provision. 115 BAB, the for manufacturing activity, certain manufacturing entity can opt for the concessional rate of income tax rate like 15%. Normally the corporate tax rate is taxable at 24% and 4% education cess. Instead of that, eligible manufacturing companies are taxable at 15% provided all the conditions satisfied under section 115 BAB. So the one of the primary condition of the 115 BAB is such manufacturing companies are started before 31st March 2023. This is called sunset clause. Now, regarding the COVID and other economic situation, that period is extended from 31st March 2023 to 31st March 2024. Next key proposal is alternative minimum tax rate for cooperative society reduced from 18.5% to 15%. So it is in line with the corporate tax. Normally the commercial companies are subject to MAT at the rate of 15%. The cooperative society normally social welfare levied at MAT rate of 15%. Simply the MAT rate for cooperative society is reduced from 18.5% to 15%. Next concept is updated return under section 139(8)(a) is introduced. Normally, for example, for the financial year 31/3/2022, normal due date of voluntary date of filing return for tax audit case is 31st July 2022 and for tax audit case is 31st October 2022. Similarly, the belated return under section 139(4) and revised return under section 139(5) can be filed up to 31/12/2022 for the financial year 21-22. Now, in the budget key proposal, updated return concept is newly introduced. So, concept of updated return, the assessee can correct this error, omissions made in the original return or belated return or revised return from the 2 years from the end of assessment year. For example, for the financial year 31/3/2022, the assessment year ends on 31/3/2023. So we can file updated return up to 31/3/2025 with, if the updated return is filed within 1 year from the end of the assessment year, the assessee have to pay additional tax at the rate of 25%. If the assessee files updated return within 2 years from the end of the assessment year, the assessee have to pay 50% additional tax on the same. So the updated return not eligible for the search and scrutiny cases and loss return cases and similar cases also. Then next proposal, at the time of searcher and survey, department may deduct some income as undisclosed income. Normally, the department instruct the assessee to file a return by disclosing this additional income also. So what is the key proposal is that earlier this undisclosed income can be set up against losses or depreciation loss at the end, even though undisclosed income is deducted by the department by search and survey operation. Practically no tax is collected by the government since the particular assessee has enormous depreciation or business loss. Now the key proposal is that undisclosed income cannot be set up against the losses or depreciation or loss already the assessee have incurred. So by the amendment of this provision, the undisclosed income tax liability can be collected by the government without hurdles of loss or unabsorbed depreciation. The next thing is the income tax expenditure is not normally allowed as expenditure under the Income Tax Act. So by virtue of this provision, so our profit as per profit and loss account increased to the tune of income tax expenditure. So the income tax is not allowed expenditure as per the Income Tax Act. So what is the key proposal is that whether cess surcharge is included in the income tax or not. So if it is included, it is not allowed as deduction. But if it is excluded, it is allowed as deduction. But various court judgment for difference of opinion is there. In this budget, clearly the proposal is that surcharge and cess is included in the income tax, that is not allowed as business expenditure. This provision is introduced with effect from 1st April 2005 retrospectively. These are all the sum of the key proposal. Thank you for all.